right here is when the crisis hit in debt terms, and yet they've written all these additional debt contracts on top of that, tied to a rate that is stated and is going away in 2021. And any contract that comes due after 2021 has to be modified. Those are their terms. For me, this is the smoking gun. I'm putting my neck on the line. This is it. By 2021, this is done.
Guys, Lynette Zang is swinging for the fences on this one, and she's got the quantifiable information that really brings this story home, so stay tuned. But first, I want to thank each and every one of my patrons over at patreon.com. You guys are making such a huge difference for me and my little team. Thank you so very much. And a shout out to one of our sponsors, Virtual Shield VPN. Imagine going to your local coffee shop and using their Wi-Fi. Little do people realize that establishment gets to keep all of that browsing data. That's why a VPN is almost essential in this day and age. Virtual Shield VPN is the easiest VPN to use, and it's also the fastest. What it does is it replaces your personal IP with a hub IP address, typically from the nearest major city to you, and with plans starting as low as $5.99 a month. Check out virtualshield.com. Protect your identity, keep your data private, and browse the web safely and anonymously with Virtual Shield VPN. Link below. And now we'll turn to our friend Lynette Zang to talk about economics, precious metals, and when could the collapse come? How quickly could our way of life change? Lynette believes she's found the smoking gun, which proves it's coming, and it's coming soon. Lynette, welcome back.
Oh, it's good to be here, Sean. I've missed you guys.
Yeah, I missed you. It's been too long, but that gives us a lot of juicy things to talk about, like the fact that Goldman Sachs was just fined $110 million for improperly rigging the FX market, which Lynette suggests to me there's a proper way to do it.
There is. It's very cheap. They just have to do it through the COMEX exchange. $1.50. Big deal.
Yeah, and so these criminal banks continue to do whatever they want, however they want, to whomever they want, and nobody ever goes to jail. And meanwhile, the U.S. has borrowed $488 billion in one quarter, the most since the financial crisis of Q4 2008, when the government borrowed $569 billion. You know, it seems to me that we're seeing a quickening of inflation, but we're not seeing it in the real world yet. And just one more example of that, Jeff Bezos' net worth just skyrocketed by $13 billion in one day the other day, Lynette. I mean, think about that. If that's not hyperinflation, I don't know what is. There's plenty of dollars out there.
Oh, there's lots. And they've been flying into the markets until now. So, or till the beginning of the year anyway. So it's kind of troubling with all of this new money that they're printing. In the crisis when they printed all those new dollars, that was supposedly to support and get us through the crisis. But we're supposedly no longer in crisis mode. And so now all of those deficits are going to fund the recovery. I mean, you can't fix a too much debt problem with more debt. It doesn't work. But if you know that you're about ready to declare bankruptcy, what difference does it make how much debt you grow?
Well, that's just right. That's it exactly. I knew friends. We had friends back in the day. We don't talk to them much anymore, but they lived in the Milwaukee area, and they claimed bankruptcy just after getting married after college. And it came as a real shock to my wife and I. But you know what they did prior to claiming that bankruptcy? They ran up all their credit cards, and they went on a nice little spending spree. Now, I don't think that was a moral thing to do, but it is what can be done. It is what is often done, and it really seems to be what this government is doing.
Oh, absolutely. And we're not alone. I mean, you can look at it globally, and that's exactly what's happening. The governments and the central banks around the world are on a massive spending spree. And, there seems to be like they don't think that there's any paying the piper, or maybe they know that they're declaring bankruptcy. And so they're just going to suck everything they can away from the population and into the government in order to do that. And certainly, the Libor change in interest rates could certainly push us. I mean, I do think that's what's going to push us over, actually.
Yeah, you mentioned that on the pre-call, this new Libor. Well, they're going to phase out Libor, and we'll talk
Right.
about that in a second, and you can get there any way you'd like. But let me ask you this first. At the
Sure.
beginning of the call here, I just mentioned this question: how quickly could our system unravel? And I was reading an amusing post from James Howard Kunstler, who noted in his recent blog, he wrote, "In our time, the most recent crash of a major socioeconomic system was the fall of the Soviet Union in 1990 to 91. The Soviet Union collapsed because it was a thoroughly dishonest system that ran on pretense and coercion." Sound familiar, Lynette? The pretense is that we think the rest of the world are going to continue to buy our treasuries and prop up our debt, and the coercion is this God-blessed tax system, which is
Right.
truly meant to drain us of our lifeblood and keep us all poor.
Well, I would agree with that. And although I also want to add that when you're talking about the tax system, there's the visible taxes and the invisible taxes. And we are completely taxed to death. Inflation is certainly, I mean, that's why they went on to the fiat money system, because that way they could tax us without our realizing it through inflation. But if it costs you more to buy the same goods and services, that's the same thing as you getting less money to work with. So, it's a disgusting tax system. I absolutely agree. And it is absolutely designed to keep us poor.
Well,
Yeah.
and how quickly do you think that this system could unravel? And let's just look at the big picture. Are we the best of the worst? Are we the worst of the worst? Japan seems to be shedding our treasuries as quickly as possible. China seems to be pulling back. I mean, what's the deal? Where do we stand in terms of the collapse?
I mean, when you talk about different countries, what always comes to my mind is the IMF. And remember, the IMF is above everybody's law, and its members are every Treasury Secretary and every central bank chief in the whole world. And what we're hearing about is the global synchronized recovery, and what we've witnessed since between 2008, it shifted a bit in 2015. But what we've witnessed are all of these central bankers and treasury secretaries working together. So at a governmental level, it may look like it's Russia and it's Japan and it's China and it's the US, but I'm not so sure that that's actually true. I can't really prove this, but you've got the significant unelected officials, but treasury secretaries and central bank chiefs working together in a coordinated way. Is it a really big leap to wonder if they're all working together over here? And it's been proven, even in government papers and written about all the time, the synchronized global recovery. Are we really embattled with Russia or China or Japan, or are we really actually moving to a one world government? And I'm not a conspiracy theorist. That's never where I go. I want to be able to prove it, in order to say it. But when I look at what they're doing and I look at how they're working together hand in hand in all other areas, it just somehow there's something that doesn't ring true to me. Do you see what I'm saying, Sean?
Well,
Does that
yeah,
make sense?
yeah, and you're a conspiracy researcher, as am I, and we know about the conspiracies. The conspiracy
Right.
to rig Libor, the conspiracy to rig the silver and gold market. These are now all proven out in the open conspiracies, but again, nobody ever goes to jail, and the system itself never changes. So with that in mind, the people
Well,
who are the smartest people in the room who are paying attention to this stuff are making moves. I want to share this piece.
yeah.
Billionaire puts half his net worth into gold. Let me just read you this. Some big investors see warning signs ahead for markets but are holding their positions. Egyptian billionaire, forgive me, I'll get his name wrong, Naguib Sawiris is taking action. He's put half of his $5.7 billion of net worth into gold. He said in an interview Monday he believes gold prices will rally further, reaching $1,800 per ounce from just above $1,300 now, while overvalued stock markets crash. So, take what you want from that. Some billionaires are moving into gold. Some nation states continue to move into gold. And meanwhile, our friends, neighbors, and colleagues don't have a clue.
Right. Exactly. But that's also by design. I mean, they want to get into positions so that when this crash occurs and it becomes visible to everybody, that the wealth transfers their way. And they've always used crisis as a wealth transfer mechanism. So, yeah, it makes me, again, I listen to what they say, but then I dig underneath and I look at what they're doing. That's a big indication. Somebody that's amassed that level of wealth, it's possible that they could influence those that write the laws.
Well, and I'm watching, yeah, and let's watch what the others are doing too, as it pertains to J.P. Morgan hoarding the largest silver position in physical form in history. And, even dwarfing what the Hunt brothers acquired when they tried to corner the silver market. So any news for us on that front? What in the heck is J.P. Morgan up to, and why in the heck is silver only $16 an ounce? We've been having this conversation for 5 years. But, sooner or later, everything reverts to the mean. And $16 silver is a joke.
It is very much a joke. And $1,300 gold is a joke, too. But we have to keep in mind that the central bankers and the governments do not want people gravitating, especially to the physical metal, because once you actually have it in your possession, it becomes invisible, and it's not something that they can track or control. They can control how you think about it. But when you see them accumulating gold and silver hand over fist like this, they're the smartest guys in the room on what's going on. And they know that this charade, the fiat money system, is dying. And they actually gave us an end date. So, they know that it can really happen any time now because of what's happening with the Libor and the transition to a new interest rate system.
All right, you brought up Libor again, and for people, no, let's go there, because for people who don't remember, the Libor rate rigging scandal is one of the biggest economic scandals really of our modern time, maybe ever. Yes, and you guys can Google this article from Zero Hedge, Central Banks, Libor, and the Road to Ruin. On the pre-call here, you mentioned something I wasn't aware of, and it's the fact that the banks are now going to try to, I guess they're moving toward phasing out Libor altogether by 2021. And I called up this article, What Happens to Your Mortgage When the Libor Goes Away? I know for sure people with variable rate mortgages could be in a lot of trouble. Maybe the same is true for fixed rate mortgages as well? But what have you found? What has your research shown? Why are the banks doing this?
Well, and you'll have why are they doing this? Okay, so the Libor was created in the 80s, and then there are 370 trillion contracts that are tied to the Libor. But out of that 300 trillion are derivative contracts. Now, here's the problem. The rate against which all of these contracts, and for you and me, that would be student loans, credit cards, mortgages, auto loans, all of those loans that were tied to the Libor. And you mentioned the variable versus the fixed. Well, I saw it with my eyes when they had, in 2008, when the housing market, the real estate market crashed. I mean, the banks certainly ended up on top. Those absorbed, and they got bigger. They absorbed smaller banks, etc. But they also saw, actually, I'm going to back up to move forward. Prior to 1933, when the markets collapsed, the banks had the ability and the right to attach all of your other assets if you defaulted on your mortgage. Well, they changed that back then in 33 so that the banks could only attach your house, not all of your other assets. Zoom ahead to 2008, 2007, when again the real estate market crashed. But this time what happened was you had massive amounts of people that were defaulting on their loans. So when they came up with a lot of the changes, which of course not everything has still been put in place, but the things that impact you and me have. They changed a lot of the documentation so that if you have a mortgage that was written after 2008, it will most likely have language in there simply stating that they comply with Basel III. Now, when they were writing Basel III, I was actually reading that, but unfortunately at that time I was not as sophisticated capturing screenshots and things like that as I am now. So when I later went back to find this language, I couldn't find it. However, that's why coming across this documentation of the change that I came across, about a week or so ago was so major for me, because they actually say mortgages and consumer loans. For mortgages, the mortgagee typically has ultimate authority to name a successor rate. So in other words, to change the rate. Consumer loans are more varied but provide similar flexibility to the lender. So that means that when you took on that mortgage, that auto loan, even if it's fixed rate or what have you, there is language in there that gives the power to adjust that rate to the lender. So, go back and read those documents, and if you see anything in there that refers to Basel III, that's where that language is most likely buried. Okay? But here's the difference between the varied and the fixed. Now, and this goes back to the historical norm. On the varied, they can change the rates anytime. So once interest rates start going up in a pervasive way, you never get out of debt if you're in a variable rate mortgage. On the fixed rate, they can't do it, bam, just like that. So that is likely why there's on average about a 6 to 9 month period before you get a letter from the bank saying you have until such and such a date to pay this mortgage off, or on this date, then your new principal will be X and your new payments will be Y. Most people will not either have the ability to pay it off or will not be able to afford the new payments, which is why you have so much property that comes back on the market. And for example, in Japan in the early 90s, their residential real estate, when that real estate bubble burst, the residential dropped 85%, commercial dropped 95%. So now, also during the reset, and not this week, but next week, when I show you how gold and silver behave during hyperinflation, you're going to see how that works. Because in Venezuela on February 7th, they had an official reset of gold, and it went up over 2,600 times, not percent. So when that happens, gold goes up, the mortgage is going to, the mortgage stays here, but the gold goes up. So if you have physical gold, then you liquidate as much as you need to, and you pay off that mortgage before it resets. And it also puts you in a position where you can buy that other real estate that comes onto the market after those mortgages reset and the market is flooded with real estate.
Right.
So there are, like every circumstance, there are advantages and there are disadvantages, but you want to be in the right position. So they will be converting those mortgages. And we were also talking, because some people say, well, they can't do that. I have a fixed rate mortgage. Well, first of all, did you really read your documents? So go back and read your documents. If you see Libor in there, but more importantly, if you see Basel III referenced in there and compliance with it, well, yeah, they can. But we have one of our precious metals consultants here is from Mexico, and his family are all like doctors and lawyers there. So when Mexico reset the peso in the 90s, they reset the mortgages as well. Well, his attorney uncle fought it because he said, you can't, I have a contract. It took him and them 10 years in court. So and he ultimately won. But if he had to pay somebody to do the work that he was willing to do himself, then, frankly, those banks have much deeper pockets and much more powerful legal teams than most likely you or I. So you can fight it. Maybe you'll win. Maybe you'll be bankrupt before that happens. I kind of feel like you need to pick your battles. Having said that, they're telling you, yeah, that's not a problem. The lenders have that ability to change it for the consumers. But in other areas, it is 100% consent required. In some of the floating rate notes, let's see, the commercial mortgage-backed securities. We have the links to all these documents. It's really easy reading, I think. And the collateralized loans and the syndicated loans. So 1, 2, 3, 4 areas of derivatives where they have to get 100% consent in order to shift to the new rate. Here's the problem. First of all, it is in July, last July, that's when we were told that after the end of 2021, Libor would basically cease to exist. Because right now, the way that Libor is established, some of your viewers might have seen when I was talking about the loss of interbank lending.
Yes. Yes. Let me jump in and just say something. I was going to go there next. And yeah, you sparked a thought. So
yeah,
let me do what you did. Let's step back so we can move forward. And I failed to define Libor for people. It is a confusing notion if you don't know what this means, guys. But Libor is a benchmark rate that some of the world's leading banks charge each other for short-term loans. It stands for Intercontinental Exchange London Interbank Offered Rate. And it has been fixed. They've been fixing it. They've been colluding to fix it and keep it low for a very long time. And so I think this may be evidence of cracks in the foundation, what you're talking about here, Lynette, because if you look at Libor rates just over the past 7 months, we see rates spiking about approximately 55 basis points between September 1st, 2017 and February 1st, 2018. They went from 1.45% to 1.98%. Those are the loan rates the banks charge each other. It speaks to the fact that the banks are taking on risk to lend each other money, and they know it, and they want higher interest. It speaks to the fact that this whole system is leveraged with derivatives on top of derivatives, and even the biggest banks are afraid of getting caught with no chair left to sit in when the music stops.
Well, let me expand on that a little bit. Okay, just to kind of simplify it, which is where I was going, there are a number of different IBORs, which simply is interbank offer rate. And then you're absolutely right, it's the rate that they charge people. And I've been talking about the inter rate here. So Libor is the London one, but there's also the USA, and there's a number of them. But most of all of the rates are tied to the one in London. Now, you can see here, since this is an interrate bank chart, or interbank lending chart rather, you can see that when the crisis hit here, the interbank lending plummeted because all of the banks then knew that they were insolvent. And
is that the 2008 peak?
Yes.
Okay.
Yes. Right here. The peak was actually, I think it was February of 2007, and then it came up a little bit more. Yeah, so that's the peak of 2008, and then it plunged.
So now if we look at the end of that chart, the interbank lending is at an all-time low. It's never been lower. Is that correct?
Well, they stopped reporting it, but the IBORs were based on this interbank lending, which had been growing since the 70s, right? So it isn't just the central banks creating money. And remember, money's created from debt. So this is a way that the banks created money inside of the system. So you can see here when it collapsed. So when it collapsed, that meant that banks were not loaning to each other overnight, which means that they had no market rate for what that number should be, and it became basically a stated rate, which is very easy. So then when you talk about, the manipulation, well, that was first discovered in 2009, okay? So it was hard for me to find exactly the date of when it was started, but I'm guessing based upon this graph and the crisis that had happened during the crisis. So now they had to start stating that rate. And there's 18 banks that actually do that. 16 of those banks were caught in this scandal, which means that they made mistakes because they got caught. And this is a very, very important concept. So I want you to hold on to that for a second. So you can see after that, all that's done is continue to go on down until it was below where it was when they first started coming out with it, and now they aren't even reporting on it. So officially, a full 70% of the Libor rate or any of the IBOR rates are actually a stated rate. So it's not what they would charge or what they would pay. It's, well, if I was going to loan this money or I was going to borrow this money from a bank overnight, this is what I would probably charge, and this is what I would most likely have to pay. 70%. And that's actually what caught my attention was that, after the scandal broke in 2012, we knew that rate had to go away because it was stated, and then it was dead silent on mainstream media. And about a month-ish ago or so, every morning on CNBC, wow, the Libor's really spiking. Wow, the Libor's moving. Wow, and I said, wow, why are they talking about the Libor? Something must be changing for them to have brought it up every day when it was dead silent. So what's happened actually is that in London, and I'm going to do a piece on this, I haven't done it yet, but I will soon. London Central Bank has come out with an alternative, and so has the Federal Reserve. But the problem is that there's no market for them yet. So even though they've come out with an alternative, and a whole bunch of other central banks and banks are working on an alternative as well, but even though they've come out with that, there's no market for it. So they still have to develop a market. Nobody knows at this juncture what's going to be used and what's going to stick. And I'd like to point out that even though they knew it was dead in 2009, because that's when this was first discovered, okay, that they were stating the rates, shocker, and it's still going on. So 2009, the scandal didn't hit. We didn't know about it until 2012. But in 2008, it's kind of hard to see, but like right here is when the crisis hit in debt terms. And yet they've written all these additional and more debt contracts on top of that, tied to a rate that is stated and is going away in 2021. And any contract that comes due after 2021 has to be modified. Those are their terms. Now, since you need, so I mean, really think about this, because this is for me, this is the smoking gun. I'm putting my neck on the line. This is it. Okay. Deutsche Bank, that has now lost money 3 years in a row, I could be wrong about this. I don't have it in front of me, but I just did a report on it. So either 48% of their debt contracts, and we're not talking about their derivative book now, we're just talking about the debt that Deutsche Bank owes. 48% of that comes due after 2021. 52% of it has to either be paid off or rolled over into new contracts tied to what? I don't know. So we've got the most dangerous bank in the whole world, according to the IMF, because they are incestuously interconnected with all of their debt contracts that are going to be exposed in one way or another because, hey, they've had losses 3 years in a row. They have gone out and, raised money, but they've got a lot of anybody that has stock there. I mean, bail-inable instruments that they've taken on. I think anybody that is willing to buy those is out of their mind, or a government. I mean, who knows? But honestly, Deutsche Bank is the wick. And what we don't know, and they are insolvent. They are insolvent. I mean, there's so much to this. But I don't want to digress into Deutsche Bank. What I want people to see is that everything has to come off in absolute perfection. They have to create this new benchmark. They have to create a market for this new benchmark. They have to transition 370 trillion in contracts into whichever new benchmark that's going to be. They have to get 100% consent in most areas. So it doesn't matter if it's one area, it's every area. They have to get everybody to agree to this, and they can't make any mistakes. And with all of this scandal, that scandal, the other scandal, guess what? If they're caught in a scandal, it's because they made a mistake. So for me, by 2021, this is done. This is done. I mean, obviously, it's beyond my control. But Sean, do you see any way for them to make this conversion?
Well, that's above my pay grade. I'll tell you what, I never thought we'd get this far. And of course, I've been keeping my eye on that 2018 prediction by The Economist magazine that this was the year they were going to introduce their world currency. And they said when it comes, embrace it. And but I do have a fix for Deutsche Bank. I'm not sure why their board hasn't thought of this. You ready, Lynette? It's the simplest fix.
I'm ready.
It's so simple. It's a no-brainer. They need to hire the top traders from J.P. Morgan, whose trading desk only lost money on 2 days in the past 4 years. So I guess those guys walk on water over at J.P. Morgan. The fix is not in. They're just really, really talented. So, all right.
Oh, yeah, sure.
You've painted a picture of concern, but it seems like every time we get on, we paint a picture of concern. And I guess we can round out the conversation, come full circle. Go ahead.
I would say it's more of an evolution. I mean, clearly, this has been an issue since the crisis. But when I raise something of concern, it's because what I'm looking at is this whole transition. So when we had that discussion on the SDR, well, that doesn't mean that went away. That just means that that's a different layer because they want everything in. I mean, it's easier to control if it's in one neat little package. So I would say that this is an evolution and a concern. Okay, it's a big concern for me because for me, this is what's going to push us over. I mean, I always knew it was going to be derivatives, 300 trillion in notional, which means with all the compression and all of that stuff, they make it look a whole lot smaller. Right. Well, after you bail everything in, I mean, how do you bail that out?
Right. Well, you're concerned.
And how do you transition all those contracts?
Yeah, the numbers don't add up. I mean, the numbers have never added up, and that's the understatement of a century. But I just wanted to round out the conversation by coming full circle and talking about what the collapse looked like of the Soviet Union in 1990-91. And
right.
This is a little first-person narrative from a guy named Yuri Baranov. And Yuri writes that in the early 90s, right after the collapse, he recalls the national currency didn't exist for a while, and coupons were to be used along with the Soviet rubles, and they were easily counterfeited notes that lost value at the speed of light, over 10,000% inflation in 1993 alone. And he said, my mom stopped working because it didn't pay at all. People would go to work, as in the old Soviet time, not being paid for months and months and months, and when paid, due to inflation, that translated into something that couldn't even buy you a box of matches or some bread. So these collapses, when they do come, look no further than Venezuela. It's absolute misery, and we don't wish it. We don't want it. I hope it doesn't come. When we have conversations like this, it's hard to imagine it not coming at some point, Lynette.
Well, it has to come. The system doesn't work anymore. The system was based on never-ending compounding debt. And since we have no value left in the dollar, I mean, officially 4 cents, and the tool that they used to regulate that were interest rates and were anchored at 0, the system as we know it died in 2008. And look, if we have deep enough pockets, we can keep it looking like it for so long because we, the population, the public, trust those in this country, those dollar bills in our wallet that were designed to lose value over time. But we have that confidence. The banks do not have that confidence anymore. Will they take advantage of it? Absolutely.
Right.
And the central banks, wow, with a Swiss surprise in early 2015, and then the Chinese surprise that same year in July, or was it July or August? Was one of those months. And again in December, where they made promises at the IMF meeting that they were going to stay this policy. And for Switzerland, 2 days later, after promises that they were going to remain pegged to the euro dollar, they changed their mind. And what that really did, and that was so significant, not because they depegged from the euro, but because the central bankers then knew that other central bankers were more likely to do what was in their best interest, even after they pledged to do what was in universal best interest.
Right.
So the only level of confidence that's left that's keeping this whole thing going is public confidence in the fiat money system and in the financial system. That's why what's happening in the stock market, and we're seeing signs of a breakdown in the real estate market, and certainly in the bond market, we're seeing all of these breakdowns. It's because they're running out of steam and there's not enough. I'm not saying they can't do more QE, but because that is certainly coming. But it doesn't work anymore. They don't have the banks supporting the system anymore. If you have enough money when you're in crisis, you can paper over it. If you don't have that savings set aside, you're done.
That's right.
I'm sorry. I really am emotional about this because I had done a whole bunch of work to set up for that YouTube video, and I came across this document from the RBC at 4 a.m., and I scrapped most of the work that I had put together all week.
Been there.
And redid it.
I know. Isn't that the worst? I mean, but in the interest of sharing truth, sometimes you have to reset what your thesis was when new information comes along that will often support your thesis, but to explain it properly, you have to dig deep and rebuild. It's happened to me a million times as it pertains to this whole Pedogate, Pizzagate investigation. Every now and then a new nugget will drop that really is a jaw dropper. I mean, I just can't believe how evil these people are. And you know what? I think so many of these bankers at the very, very tippy top of the pyramid are truly evil individuals as well. But, it's a system they built for them. They didn't build it for us, and they took away the people's money in gold and silver. Yeah. That's why they did it.
Yeah, that's exactly why they did it. And then they took away the government in 71. Nixon took away the government's ability. So those that we are supposed to vote in, that are supposed to represent us, they took away their ability to hold central banks accountable when they eliminated their ability to convert dollars into gold. So, we say, oh, well, Nixon closed the gold window. Like, that's no big deal. But the reality of that action was he handed over full power to central banks and to banks to control the population and the money supply. Because, whoever controls the money basically controls the population.
100% true.
Yeah.
No, it's 100% true. And you know what? I'll tell you what the danger is right now. The danger, because I think Donald Trump is obviously a much better choice than the witch being in the White House. That would have been game over. She was a Rothschild puppet. But here's the problem with President Trump. Despite the economy, I think, clearly doing better under him than it would have under her, despite so many things that I think he's trying to implement to make America great again, the gold is leaving U.S. vaults, and there are signs of upcoming currency wars here and armed conflict. This comes from Strategic Culture Foundation, and they note that the Turkish government has made the decision to repatriate all of its gold reserves that are currently housed in the U.S. Federal Reserve System. Now, this is really important because when we talk of the bankers, when we talk about the Rothschilds, when we talk about the IMF, we talk about the people like George Soros who will target nation states at a whim to profit or to bankrupt or to destroy an entire nation and its economic system, which George Soros is famous for.
Done it for once. Yep.
This is how they could have President Trump over a barrel, because they know there's probably no gold in Fort Knox. They know what's really going on behind the scenes. They know what their plans are. They're 6 steps ahead with all of this stuff. I would think, maybe not. Maybe they've lost control. But their final card to play is the gold card. Take the gold, expose this government as having no gold, and then what happens to the dollar? I think that's a scary thought.
Well, I don't know who actually, Steve Mnuchin went to Fort Knox, and didn't he see a gold bar and say, see, we have gold?
Yeah, he said your gold is safe. But I joked that, it's safe in the hands of the Rothschilds. He didn't show us any pictures, and there's been no audit since 1954 of the Fort Knox gold.
And according to the Federal Reserve, our gold holdings have not even changed a 1/16th of an ounce in all that time, even though we mint coins and sell coins and all of that. So, you can go figure that out. But what's happening is, as world reserve currency, we know that that's shifting. We know that we still have that title, but and what that means, of course, is that if you are a government or a corporation going outside of your borders to buy anything, oil, lumber, steel, medicine, whatever it is, this is not any longer true, but when it was true, you had no option but to use dollars. So by proving that we're not sitting with any gold in our, in deep storage, we can't deliver it out. Look at what happened with Germany. Ultimately, we did, but look at how long that took. If they can prove that on top of everything else, that absolutely kills that status justifiably.
Right. Well, it's going to be.
And you were talking. I'm sorry, but you were talking about Russia, and Russia. Presuming that all central banks, we can believe everything that they tell us, but Russia now has more gold, or been accumulating more gold than China. Even they just passed them.
Right.
There's a reason they've lived through this, haven't they?
Yeah,
officially.
According to Alistair McLeod, though, he believes that China probably has north of 10,000 tons. But, who knows? We don't really know.
We don't know. They mine a lot of gold. None of their gold that they mine leaves the country, and I don't know where it gets reported. So I think he could be very accurate in that. But at least officially, Russia's gold hoard now, they've accumulated more than China because they buy every single month. They don't miss.
Right.
They don't miss, but they've lived through it.
Right. Well, that's right. One thing is true, Lynette. Gold is truly not a barbarous relic, and all things revert to the mean. And sooner or later, there's going to be a reset, and I think our listeners will probably be in better shape than those who don't listen to us, because physical gold and physical silver in your own hands is truly real money, unencumbered, and it's yours. So, Lynette,
and decentralized and invisible to governments and central banks. That's why they hate it.
All right. Well, shout out your YouTube channel and the company information if folks want to contact you.
Absolutely. ITM Trading, 888-696-4653. I have a wonderful team of very bright, very intelligent precious metals consultants. And what we like to do, what makes us different than anybody else, is I've studied currency since 87 and discovered patterns that happen. And so we put together strategies that for individuals that support their goals. And we're keen on education. So YouTube, ITM Trading. My lovely assistant, Megan, is great on all of the social media. So, that's how you get us.
Hey, Lynette, thanks so much for your time. We very much appreciate it.
It is my pleasure to be here, and I look forward to coming back again.
Absolutely. Guys, thank you so much for tuning in. We very much appreciate your support. Do check us out daily at sgtreport.com for real news 24/7, and check out our sister sites, thephaser.com and thelibertymill.com, for, again, real news, the antidote to corporate propaganda. Much love, guys. Thanks for listening.
Be safe.
All right.
Bye.
Bye-bye.
Even at the risk of my own success, my own career, I've been sent here to give y'all the truth. Daisy, I know you got killers. Please don't send them at my head. Just call me. Talk to me like a man.